Hey everybody, Gabriella Huffman here to help you study for your North Carolina real estate exam. Let's start with Chapter 3. In Chapter 3, we're going to talk about encumbrances on real property. So what you need to take away from this chapter are the 4 types of encumbrances. There are 2 types of liens and lien categories. We're going to talk about real property taxes, special assessments, and the 2 types of easements. So the first thing we need to understand is what is an encumbrance. So an encumbrance is anything that affects title. So that doesn't mean negative. What I tell my class is anything that's tied to the title or tied to the property in some way. For example, here's an acronym that I give my students, REAL. Your 4 types of encumbrance are restrictive covenants. This can be your HOA docs. This can be deed restrictions, which we'll talk about more in Chapter 5. Any easements, encroachments, that's an illegal extension to someone else's property. That could be that the fence was extended or a garage was built illegally to the other side, and then liens. So know your 4 types of encumbrances: restrictive covenants, easements, encroachments, and liens. So liens, here's a trick for the test, is a non-possessory charge against the property, non-possessory. There are 2 types of liens: specific lien tied to a specific parcel or property, and general, which ties to a person. Your 2 types of category liens are voluntary and involuntary. So specific liens are highly tested on the exam. So you have voluntary specific liens, such as a mortgage. You chose to take out a mortgage. That was a voluntary process. Involuntary would be your real property taxes, assessments, mechanics lien, and commercial broker lien. So you don't get to choose whether you pay your taxes or not. That's why it's involuntary. General liens would be your personal, state, and federal taxes and judgments. Property taxes, there's the timeline in your book that you need to know. I highlighted here the important dates. January 1st, that's when the tax bill attaches to the property. July 1st is when a new rate is set. September 1st is when the tax bill is due and payable for the year. And January 5th is the last day to pay your property taxes. Tax rate can be stated in mils, which is 1 per 1,000, or $1 per 100 of assessed value. So in my class, I gave this T-bar to help with the math on how to calculate your taxes. So notice your annual taxes are on top, assessed value, and tax rate on the bottom. So how this work, let's say, for example, we don't know what our annual taxes are, so we're going to cover that up. So now our formula appears. To calculate our annual taxes, it's going to be assessed value times tax rate. Another math problem may ask you, well, what is the assessed value? So you're going to cover that up. And now you see your formula starting at the top, annual taxes divided by tax rate. The T-bar works every time. Special assessment is another type of tax. It's improvements to the property, such as sidewalks. So there are 2 types of assessments, which we'll talk about when we get to the contract chapter, but I went ahead and talked about them now. There are proposed assessments, which would be future, going to happen usually after the buyer buys the property. Therefore, the buyer will pay for proposed assessments. And then you have confirmed assessments, something that's happening right now, being processed and billed right now, that will be paid for by the seller. Easements, notice, is also a non-possessory right, in this case, to use the land, not ownership, but it is use. There are 2 types of easements: easement appurtenant. As we learn, appurtenant means to go with. Therefore, this easement goes with the transfer of the sale. It conveys. You have a servient, the person who is giving permission or serving that easement use to the dominant who's actually benefiting from that easement. A merger, for example, if Lot A and Lot B become the same owner, a merger would terminate the need of that easement. The second type of easement is easement in gross. This attaches to a person or business entity. Therefore, when that person or entity terminates or dissolves, so does that easement. That concludes what you need to know from Chapter 3. Feel free to reach out to me via email, phone, or Facebook.